Hello, everyone. Welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is at Doug Pless. I have a brief announcement. You can win a blue jacket. I'll show you how in just a couple of minutes, and also a chance to win multiple months, 3-month subscription to Global Plus. So more about that in just a moment, but I just want to let you know that that is still available through the end of the month. Here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and that certainly applies to large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and share puts and calls in NDX and QQQ, buy and sell puts and calls in SPX, in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setup. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat in YouTube for your questions or comments. Please feel free to post. I'll do my best to answer your questions. Hello, Julian. Welcome. Glad you're here. All right, here's my agenda for today, Wednesday, October 22nd. First of all, I want to go over news items, economic data, events, and earnings for today, as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups earlier today. Then I'll get to the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know. I'll be glad to do that. All right, let's get started with news items. So first of all, today was VIX expiration, 9:30 a.m. Eastern Time. And then Tesla reports earnings after the market closes today. And of course, we'll take a look at Tesla today. Also, Netflix reported earnings after the market closed yesterday. And then VRT, Vertiv Holdings, reported earnings before the market closed, before the market opened today, and we'll take a look at both of those stocks. So let's go ahead and do that now. We'll take a look at Netflix, then we'll get to VRT in just a couple of minutes. And upcoming for the rest of the week, Intel reports earnings tomorrow after the market closes. And then, of course, the U.S. government is still shut down, but they have brought people back to calculate the CPI data. That will be reported Friday at 8:30 a.m. Eastern Time, CPI data. And then non-government data, 9:45, S&P Global PMI data comes out. And then at 10 a.m., Michigan Consumer Sentiment. All right, so that's what's coming up. All right, let's take a quick look at Netflix, and then we'll get to VRT in just a couple of minutes. So let's take a look at Netflix, and I'm going to shift to puts and calls. Netflix. Traders not too happy with Netflix earnings, and traders have been buying puts. This is the hero signal. This is available to Spotgamma subscribers. This is showing options trades and market maker hedging activity in real time. The white line is price for Netflix, and the blue line indicates puts. So a falling blue line indicates traders are buying puts. That's negative delta. And then the falling orange line indicates traders are selling calls. And this set up a very nice short in Netflix, right about 9:45. Nice short reversal. All right, that's Netflix. We'll go back to total. All right, so let's go back now. Again, we'll talk about VRT in just a couple of minutes. All right, so let's move on to positional analysis. And I'm going to start with the S&P 500. And just want to point out a couple things on this chart. Then we'll take a look at a higher time frame. A couple of key levels in play. Here's the SPY 670 absolute gamma strike volatility trigger. And price broke down below that level pretty early this morning, or earlier today, 11 a.m. And then this is the key level for today, the SPX 6700 absolute gamma strike, and then a Spotgamma's bull bear line in the sand. Bullish above, bearish below. And yes, SPX did break down below that level earlier today, just right around 1 o'clock. So that is, again, that was a key level, key break today. And also the the 6730 volatility trigger. SPX broke down below that level much earlier today. All right, so let's step back. Let's take a look at our higher time frame. Let's stick with the SPX, the underlying index for the S&P 500. And this is a 1 day, 1 year chart in Thinkorswim. So let's take a look at the most recent price action. Of course, coming off the April rally, April lows. A little bit of a pullback end of August, September rally, then another pullback right at September expiration. That's that vertical red line there. And then Friday, October 10th, the tariff tantrum. And so far, SPX has traded within that range, the high to low, and SPX trading within that range still. Has not broken out. All right, so let's take a look now at a shorter time frame. Let's go to a 30-day 1 hour chart. And note that this is, again, 30-day 1 hour chart. SPX is traded roughly in a 200-point range between around 65.50 and 67.50, and still remains in that range. So up on the upside, really right around 67.50 is resistance. And we'll see that on the Bookmap chart today, that level did act as resistance before the cash open. All right, so nice downtrend today. All right, so let's take a look at the levels on this chart. And I'm going to zoom in. so we can see the levels in play a little bit more closely. All right, let's start with the expected moves. Dashed purple lines showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. SPX trading almost in the middle of that range. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. I do post expected moves every day in the Options-Doug chat channel in Bookmap Discord for SPX, ES, and NQ. And I post those the day before. All right, so SPX trading now well below its lower daily expected move. That's this dashed blue line right there. All right, so that's the expected moves. All right, let's take a look at the Spotgamma levels on this chart. These are shown with the dark red lines. These are available to Spotgamma subscribers on a variety of trading platforms. Again, this is Think or Swim, a 30-day, 1-hour chart. I'm going to point out the key daily levels. First of all, the put wall is 6,500. That's a strike with large net negative delta that can be expected to act as support. And that is the next major Spotgamma level down below. Next level up is the absolute gamma strike at 6,700. That's a strike that I mentioned before, the key line in the sand. That's at L1, absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. And so that's where much of the gamma weighted open interest is concentrated. Note yesterday that level, for the last couple of days, that level had moved down to 6,000 and is now back up at 6,700. So the last time I spoke on Monday, it was down at 6,000 and moved up to 6,700 today. All right, above that, just above that, is the volatility trigger. I also mentioned that. That's at 6730. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. And above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. Note this is based on Spotgamma's older total open interest model. And we'll take a look at a current view of gamma based on the new synthetic open interest model. Then finally, the call wall is up at 6,800. And that's a strike with large net positive gamma that can be expected to act as resistance. And note that level was at 7,000 on Monday, and it moved down to 6,800 yesterday. It remains at that level. All right, as far as shifts in levels for today, volatility trigger shifted slightly higher, and again, the absolute gamma strike shifted much higher from 6,000 up to 6,700. All right, let's wrap up our view of SPX with a 1-minute chart. So this shows price action, and this was actually a continuation of a rally from Thursday afternoon. Right here, this dark shaded area, this is Monday, so this is Friday afternoon, Monday, Tuesday, Wednesday. So the rally that began Thursday afternoon continued into Monday, then consolidation between around 67.30 and 67.50, and that continued yesterday in a very very narrow trading range. And then SPX today broke down below that level, broke down below the 67.30 level, which is the volatility trigger today. And then also broke down below the 6,700 level. Note that level, around that level, acted as support earlier today, then resistance. As the move down accelerates. All right, that is SPX grinding down today, making a very nice series of lower highs. And again, it looks like it's accelerating down. Let's take a quick look at SPY, the other underlying index component, to see how S&P 500 is trading around those levels. All right, let's zoom in on this. Overnight high right around just below 673. And now SPY has dropped down just a little bit less than 10 points. And now down below its volatility trigger. That's also the absolute gamma strike. So that's kind of the key level for SPY, the 670 level. And SPY trading well down well below that level. All right, there were no shifts in levels for SPY. So all levels remain unchanged from yesterday. All right, that's SPY. So let's get back to Bookmap. So I've talked about SPY levels, ES level, SPX levels, and I have both of those levels on my chart. Hello, Amir. Welcome. Glad you're here. All right, so I have SPY levels and SPX levels. So again, here's that SPX 6700 level. Next level down is the 6650 level. And then earlier today, before the cash open, this was right around 1 a.m., the 6750 level, that's a large gamma 3 level, acted as resistance. So if you consider the before the cash open, looks like SPX may be heading, SPX may be heading toward a 100 point move down today. All right, then also again, here's the SPY absolute gamma strike volatility trigger. And note there's a difference in price. Note there's a difference in price between ES and SPX. And today, let's see what it is right now. It's somewhere between 37 and 38. So I believe the last time I checked, it was around 38. So I'm showing SPX 6700 at ES 6738. Maybe a little bit closer to 37 now. And user skills, welcome, glad you're here. Ask what are the things you look at Bookmap to take a trade, sir. I will. That's the basis of what I'm talking about today. So I'm talking about my positional analysis first, then I'll get to trade. So that I will spend plenty of time talking about the things that I look at to take a trade. So just be patient, give me time, and we'll definitely take a look at that. So again, looks like this move down is accelerating. Downtrend lines getting steeper. All right, so that's ES. Let's take a look at NASDAQ. NASDAQ, very similar pattern. And let's take a look at the underlying index charts. There are a lot of lines on this chart. And let's take a look at the underlying index chart so we can isolate some of those levels. So we'll go to QQQ. Zoom in. Dark shaded portion is the regular trading hours. Looks like QQQ found resistance at its 611 volatility trigger just after the open. Then resistance at the 610 absolute gamma strike, that's L1. So those are the two key levels. And then looks like QQQ may be finding support just above the 600 level. That's a large gamma 2 level. All right, shifts in levels for QQQ. Volatility trigger shifted lower, Call wall shifted higher up at 620, so the call wall is definitely not in play for today. Let's take a look at NDX. And the volatility trigger for NDX at 25,090, just a little bit below the 611 volatility trigger. There it is right there. And price broke below that level. Also broke below the put wall. And the put wall is at 24,850. It looks like there's a combo level just 1 point above that. All right, so NDX also making a series of lower highs. All right, back to Bookmap. So again, I have those levels on my chart. There's the QQQ 611 volatility trigger, 610 absolute gamma strike, and just above that, the 25,090 volatility trigger. And then there's the QQQ 600 level. And again, sorry, I know there's a lot of lines on this chart, but it helps to isolate them with the individual index charts. And of course, we'll take a look at setups in just a couple of minutes. All right, so let's wrap up our positional analysis by taking a look at gamma. And I'm going to go to the trace gamma heat map. So what this chart, and it keeps shifting to charm pressure for some reason. All right, so let's step back in time. So what this chart is showing, this is available to Spotgamma subscribers. And the data that we've looked at so far, the levels, those are based on static data. They're based on open interest, which is updated once a day, sometime overnight. And Spotgamma uses those to set the levels for the day. Those levels remain in place. And then this is changing every 10 minutes. So let's step back toward the beginning of the day. And the blue shading is showing positive gamma. Remember, in positive gamma, we're looking for lower volatility, market makers trading against price. And then in the red shading, that shows negative gamma. We're looking for higher volatility as market makers trade with price. So this is the beginning of the day. There was a large GEX bar here right around 67.35. That was noted as support in the Spotgamma AM Founders Note. Didn't last for long. And this line right here is the hero signal. We'll again get to that. And oops, this line right here, hero signal. All right, let's step through time and see how this changes. And focus your attention on this bar right here, the 66.75, that large positive gamma. And what happens during the day, typically, price will seek these very large positive gamma bars. So that's the price target down below, 66.75. Note the hero signal continues to move lower, and SPX, just afternoon, still trading in slightly positive gamma, blue shading. Some negative gamma down below. Then trades down below that 66.75 level. And that's the current picture right there with some negative gamma. Over here, red shading. All right, so that's the current picture of gamma. All right, so let's move on now. Let's take a look at some setups. I'm going to start with the S&P 500. And as always, I'm going to start by taking a look at what options traders have been doing today. And they've been selling. They've been buying puts and selling calls, taking negative delta options positions. So let's zoom in on this just a little bit. So in the morning, it took a little while for this to get started. But here was the peak right here at 9:45. And then hero signal started to grind lower and then drop pretty sharply just after 10 a.m. as traders started buying puts and selling calls more aggressively. So let's shift to puts and calls. So again, orange line showing calls, blue line showing puts. I'm going to have to jump back to avoid the auto zoom. All right, so there's that call peak. Right around 9:45, traders stop buying calls, start selling calls, and then right around 10:10, remember that's when I mentioned the price really started to accelerate lower, and that's when traders started buying puts. Right around 10:10. So at 10:10, traders were selling calls and buying puts. That's bearish momentum, and price started to move lower. All right, so that is the S&P 500 index signal. This is showing options trades and market maker hedging activity for the S&P 500 index components, two of which we've already talked about, SPX and SPY. This also includes options trades and market maker hedging activity for ES and XSP. All right, let's take a look at the other signal available for the S&P 500. This is the S&P 500 equity signal. This is showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. And by the way, for this S&P 500 index, when traders buy and sell puts and calls in SPX and SPY, for example, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. So that's why it's important to look at this signal, and both really for the if you're trading ES futures. S&P 500 index signal, equity signal, pretty similar. And this is showing right around 9:50. Traders started buying puts, shown by the following blue line, selling calls, and they really continue to do so. All right, back to Bookmap. Let's go back to ES. Zoom in a bit. All right, so the move really began, again, remember these trend lines. 1, not very steep. 2, a little bit steeper. And 3, much steeper. All right, so the second trend line began right around the cash open, 9:30. So we'll focus on that. So right at 9:30, the volume dots in Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers, and the aggressive sellers came in right at the cash open. ES broke below VWAP, continued to make a series of lower highs. And on the subchart here, this is showing cumulative volume delta. Really didn't start to drop. That's the magenta, the dark blue to magenta line. Really didn't start to drop until 10:10. Again, remember that's when traders started buying puts. And also sell stop orders helped to fuel that move lower. That's shown by the following yellow line. One thing interesting to note is that large traders are fading this move with iceberg orders. So they have buying weakness with iceberg orders they use to hide their size. So that may be an indication of a recovery, a move back up. And Amir says, I don't know why I see the numbers and charts more clearly here than on Discord. Yeah, I'm not sure about that. I think it should be 1080p on either Discord and YouTube. Or maybe 720p on Discord, I'm not sure. But it should be 1080p on Discord for sure. All right, so that's the S&P 500, maybe trying to recover. Looks like there were some limit buy orders here shown by the the heat map and Bookmap. And ES found support just above the 6650 level. That is the SPX 6650. All right, so that's the S&P 500. Definitely a bearish day. All right, let's take a look at NASDAQ. All right, so it looks like, again, remember that 600 large gamma 2 level that I mentioned before. Looks like NASDAQ found support at that level. And NASDAQ also actually started to accelerate lower later than the S&P 500. This is showing 10 a.m., right around 10 a.m., when the NASDAQ started to move lower. So let's see what options traders are doing on NASDAQ. Back to Hero, and let's go to the NASDAQ underlying index signal. Zoom in on this just a bit. NASDAQ rallied. Looks like it found a peak just before, right around 9:55. Started to grind lower. Traders were selling calls. So this is showing options trades and market maker hedging activity for the NASDAQ underlying index components that we've taken a look at before. Again, that's QQQ and NDX. The white line is price for NDX. So starting right around, actually the put buyers really didn't start until this peak, right around 1025, but traders were already selling calls, and NASDAQ NDX was moving lower. All right, there's another signal that we can take a look at for the NASDAQ. That's the Mag 7 signal. This is showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. And traders started selling calls and buying puts just before 10 a.m. Shown by this kind of rounding pattern in the calls. 9:55, traders selling calls, buying puts. That's bearish momentum. And it looks like now it has stopped. Looks like there's a little bit of gap in the data there. But it looks like the put buyers and call sellers have now taken the foot off the gas. And this is showing price for QQQ. And you can see the 600 level there. And that is where QQQ found support. All right, back to Bookmap. All right, so again, remember the move down began 9:55, 10 a.m. Buyers are exhausted. Magenta volume dots coming in. NASDAQ moves lower, makes a series of lower highs with very deep pullbacks. These red lines are 50-point increments. So this was a pullback of almost, right here, this first pullback, almost 150 points. Then the downtrend continued. And again, finally, maybe, potentially, finding support at 600. Looking at the subchart here, you can see the downtrends. And let me zoom in on this just a bit. Subchart here. Cumulative volume delta really didn't start to drop lower until about 10:30. And also sell stop orders, shown with the yellow line, helped to fuel that move lower. Now in the case of large traders with iceberg orders, it looks like initially they were fading that move. Then they join the move down, and now again looks like maybe a few large traders fading this in portion of this move, maybe with iceberg orders. So basically today, very nice short setups in the ES and NQ futures from the open for ES and from 10 a.m. for NASDAQ. All right, let's. Any questions about the indexes? All right, let's take a look at some stocks. All right, so let's go back to Hero. Let's do one quick check. All right, so we see the Mag 7 signal has leveled off, tapered off here. Same for NASDAQ signal. Looks like some put sellers, call buyers coming in. Equity signal flattened out. And then the S&P 500 index signal. Looks like some put sellers came in. That's shown by the rising blue line there. Didn't last long. And now basically the put line and the call line are flat. But at least they've taken their foot off the gas. Well, let's take a look at some stocks. All right, first stock I wanted to take a look at is Google. And this is a very large block order here, institutional order. And then when those very large block orders come in, and that was a huge order buying puts, when those block orders come in, that tends to distort the hero line. So let's zoom in until that line disappears. Thing I wanted to show, and there are really two of these patterns, was the call peak pattern here. Looked like a little bit of a delayed bullish opening drive. Traders aggressively buying calls. Flow alert comes in. Signals significant options activity, get your attention. And then traders abruptly stop buying calls, start selling calls, and price reverses lower. Some call buyers, put sellers, call buyers came back in, then another call peak pattern, not quite as abrupt. There were a couple of peaks there. So that's Google. The main setup here is this 940, 945 call peak, bearish reversal. So let's go take a look at Bookmap. Go to Google. All right, so there's that first call peak reversal at 256. That very deep pullback. Then that second call peak, again right around 256. And now Google trading down near the lows of the day, right around 250. Back to Hero here, and 250 is the key gamma strike. Shown right here, that's the strike with largest gamma. All right, and this is pretty bearish for Google. This large block order, someone buying puts. Let's check on this. Let's see. All right, so this, I have turned on next expiry right now. So for stocks, for Google, this would be options that expire on Friday. And note the green line here is showing those next expiry puts. And then the blue line is showing all expirations. So that would be puts that expire this Friday, next month, next year. So this indicates this is a little bit more bearish longer term when traders are buying puts further out in time than puts that expire on Friday. We're going to turn that off. All right, let's move on. Let's take a look at Meta. Another call peak pattern here. Very nice call peak, bearish reversal pattern. just after 10 a.m., traders abruptly stop buying calls, start selling calls, and price moves lower. And it looks like they finally taken the foot off the gas. The put buyers, call sellers, Meta trying to consolidate. So let's go take a look at Bookmap. We'll go to Meta. So for stocks, this is very typical. The traders will put their orders for stock as high priced as Meta at the zeros and the fives. And those orders, the history, the limit orders in the order book, these are passive buy and sell orders, are shown by Bookmap in the heat map. Again, that's a history of limit orders. So this was showing at 740. There were some limit sell orders before the cash opened, but most came in right at the cash open, and Meta headed straight up to those limit sell orders. Those orders were consumed, and you can see the big green volume dot there. Then price reversed lower with that call peak reversal pattern. And Meta also making a series of lower highs. And you can see cumulative volume delta shifted just after 10 a.m. as Meta reversed lower. All right, so that's Meta, another call peak reversal pattern. All right, next stock, NVIDIA, actually Microsoft. And earlier today, this is one stock that was bucking the trend, and that didn't last. Let's see what options traders are doing in Microsoft. Go to Microsoft. So this is a little bit of a different pattern. So we saw a couple of call peak patterns. Now this is a bullish opening drive. Again, remember I mentioned Microsoft bucking the trend in the morning up until about maybe 10:10, something like that. Aggressive call buyers driving Microsoft higher. They took the foot off the gas till about 10:45. Then call buyers came back in and took Microsoft up a few more points. Then they took the foot off the gas, and that fuel that had driven Microsoft higher was gone, and then Microsoft reversed lower. So call buyers driving price higher in the morning, and then they took the foot off the gas, and Microsoft started consolidate, then drop. So we looked at call peak reversal patterns, and then also here bullish opening drive, and then a call exhaustion. So a couple ways to play that. First, get long with the bullish opening drive. And another way to play that with these call exhaustion patterns is just to buy a put spread or sell a call spread. All you're doing with the spread trade is saying, I don't think price is going to move above this level. I think it's going to stay below that level. All right, back to the call peak patterns. NVIDIA, very, very nice call peak pattern. Just a beautiful example. Bullish opening drive, traders buying calls, selling puts. Market makers take the opposite side of those trades, and the hedged or adult exposure buying stock, and then call buyers especially abruptly start buying calls, start selling calls, price moves lower, and the put sellers stop for a couple of minutes, then started buying puts. So a little bit before 10 a.m., traders were selling calls and buying puts, and price reversed lower. And note, price did break down below the 180 key gamma strike. and traded all the way down to the 177.50 hedge wall. All right, so let's go take a look at NVIDIA. Go take a look at Bookmap. There's NVIDIA. There's that call peak reversal. Some aggressive sellers start to come in. Price breaks down below the 180 level. And then actually traded down below the 177.50 hedge wall. Showing about right there. Now it looks like NVIDIA is chopping up and down around that level. And again, very similar pattern to other instruments. Very nice, steady trend of lower highs. So that's NVIDIA. Again, another call peak pattern. All right, let's take a look at Tesla. Of course, Tesla reports earnings after the close today. And Tesla has been bearish since the open. So let's see what options traders are doing in Tesla. Tesla, this is a bearish opening drive. Traders selling calls from the open. When traders sell calls, market makers buy the calls. They have to sell stock to hedge their delta exposure. Tesla broke down below the 440 key gamma strike. And it looks like it tested the 430 hedge wall. And is chopping just above that level right now. That's this 430 hedge wall. So far today acting as support. So traders were selling calls. They're buying a few puts also, shown by the negative delta notional for both these lines. But the call sellers definitely driving price today. So let's go to look at Bookmap now. Go to Tesla. All right, so looks like Tesla briefly traded higher. Found resistance at 445. And now finding support at the 430 hedge wall. All right, I've got a couple of other stocks to take a look at. Let's take a look at Robinhood. Down pretty sharply today. Looks like, well, what's been going on for the last few days is somewhat of an unwind of the speculative froth. So the quantum computing stocks, nuclear stocks, other speculative stocks have gone up 2, 3, 4, 500% in the last couple of months. And now traders are starting to unwind these long positions, taking profits, getting out of the longs. And many of these stocks are not even making any money. They don't have any earnings. But now Robinhood is not in that. Definitely not in that camp. Robinhood is making money, but it looks like it is joining that unwind of speculative stocks. That's definitely the case today. So a bearish opening drive in Robinhood. Let's go to Robinhood, take a look. Traders selling calls, then they start buying puts right around 10:15. And Robinhood moves lower, breaks down below the 130 put wall key gamma strike, and now trading much lower. Zoom in on this just a bit. So traders were selling calls from the open. That's shown by the falling orange line. Now the flow alert comes in just after the open, signals significant options activity, get your attention. It looks like maybe the put buyers and call sellers have taken the foot off the gas. right around the 122 level. All right, so that's Robinhood. All right, one last stock I want to take a look at, VRT, Vertiv Holdings. And this stock is not, certainly not as widely followed as the stocks that I've talked about before, some of the Mag 7 stocks, as well as Robinhood. But it has definitely been a strong stock the last few weeks. And let's take a look at VRT reported earnings before the open today. There was a very positive reaction, and VRT moved up over 15 points. Red lines there, the red horizontal lines at the zeros and the 50s, and then started to break down a couple of hours later, and then really started to move down right around 9 a.m. So let's see, again, this is going to be pretty thinly traded compared to the stocks that we've looked at so far. But let's take a look at VRT. Zoom in on this. And this is a bearish opening drive. Traders selling calls from the open and set up a very nice bearish divergent short. So as traders were selling calls, price moved up and set up a very nice divergent short right around 940. So that's VRT. Does anyone have any stocks they want me to take a look at? If not, we'll go back to the indexes. So it looks like the S&P 500 still trying to recover. Let's go back to Bookmap. Go back to ES. Could be a double or triple bottom here. As ES tries to recover. Again, remember, large traders have been fading this move since about noon with iceberg orders. They've been buying on the way down, buying weakness. And sorry, I don't know how to pronounce your name. Could you review Netflix? Yeah, I looked at Netflix earlier. We'll take a look at Netflix again for sure. All right, so I don't have Netflix and Bookmap. These are stocks that I mainly trade more actively. I don't trade Netflix actively. It's just a little bit, the price is too high, the bid-ask spread too high. But I do have it here in Bookmap. So let's go to Bookmap, and we'll go over to Netflix. So what this is showing is traders have been taking negative delta options positions from the open, buying puts, selling calls. This set up a very nice short just after 9:45. A little bit of a peak and the hero signal there, but then again, traders started buying puts and selling calls, and Netflix started to move lower after making that peak right around maybe 9:46, something like that. So right now it looks like let's go ahead and shift to puts and calls. So it looks like maybe a few call buyers, put sellers coming in, and now Netflix trying to recover after trading to down around, looked like 11.13, something like that. Or 11.23, yeah. All right, that's Netflix. I'm going to shift back to the total signal. Go to the S&P 500. Shift to puts and calls. All right, so put sellers, call buyers coming in now. Shift to the equities. Not quite as strong in the S&P 500 equities, but the index components. They're buying SPX, SPY, calls and selling puts. Market makers take the opposite side of those trades, and they hedge their delta exposure by buying ES futures. All right, back to Bookmap. Back to ES. Aggressive buyers coming in. Maybe they can move it back up to the ES lower daily expected move, or even the SPX 6700 absolute gamma strike level. Let's check trace. All right, trace, we've got the gamma heat map here. Let me zoom in just a little bit. All right, so that's 6675 gamma level has been rebuilt. So it's back to a 99 percentile strike. Looks like SPX right now in a pocket of slightly positive gamma with negative gamma below the red shading and above. Let's check charm pressure. For potential pinning targets. So what we're looking for is blue buying support below and red selling pressure above. And if price can make it back up to 6,700, that would be the most likely level. So looking for blue buying support below, red selling pressure up above. All right, back to gamma now. All right, so it looks like the large traders with iceberg orders starting to get their way as ES attempts to recover. All right, questions and comments? Got a couple minutes left. Any other stocks you want me to take a look at? All right, let's go back. Let's check Tesla again. All right, Tesla also trying to recover. Go back and check Hero for Tesla. All right, so ahead of earnings, traders again have been selling calls and buying puts. And the call sellers have been taking longer term positions. So they could be taking profits. Oh, that's QQQ, Google. So I think I might have mentioned before the green line for Google was puts, that's actually calls. So this, and here, Google, remember I mentioned this large institutional block order of longer term trades. So that is the longer term put signal. And then this is the next expiry put signal, the light blue there. Then the orange and green lines are the call lines. All right, back to Tesla. So traders selling long-term calls and then buying a little bit more long-term puts. And I'm looking at the orange, the typical orange and blue lines compared to the green and light blue lines. Pick the total. Let's see how they're doing in the S&P 500. So in the S&P 500, it looks like just a little bit over half of the trade today is in 0 DTE and more into longer term trades. So that's slightly bearish. They're taking longer term positions, bearish positions in the S&P 500. All right, back to Bookmap. Back to ES. All right, last call for questions, comments. All right, ES trying to recover still. And the pending target shown by Charm was at 6,700. So that would be up here. All right, everyone, my time is up. I want to thank you very much for watching. Thanks for your questions and comments. Have a great afternoon, and I will see you next Monday. Thanks again. Bye.